Hi and welcome to the Melbourne Cup edition of our interest rate update for it's November 2015. I'm here with Rob Gilmour. Tell us a bit about the decision yesterday, Rob.
Yeah, thanks, Aaron. Well, look, it was a live meeting by the Reserve Bank yesterday. There was quite a bit of speculation that there may be a cut to interest rates, but at the end of the day, they've decided to hold rates at 2% for the month.
Yeah, okay, so there were obviously a few things behind the decision and factors at play because there was speculation that it may have cut. So tell us a bit about what's behind it.
Yeah, sure. I mean, look, going back to sort of previous comments about RBA decisions, they are very much watching the state of the economy. They are seeing improvements in employment growth, so some stability in the unemployment numbers. They're seeing increases in consumer confidence and business confidence. So overall, they are saying while we're growing below trend, that there are positive signs for growth and the stability of the economy going forward.
Right.
Look, that said, inflation is quite low, at the lower end of their target. And they are also looking at what the actual banks are doing in terms of their rates. And during the month, we saw the big four banks put up their interest rates. So in effect, there's out-of-cycle rate increases that are going on. And that sort of added the speculation that the Reserve Bank might start to offset that with this month's rate decision, but they decided not to.
I see. Because, we saw all the big banks move. They moved between 15 and 20 points up. So the fixed rates haven't changed yet at all. I haven't seen any of that happen. The smaller banks, the smaller lenders, the regional ones and just any of the smaller ones haven't really moved yet as far as I've seen. So we've got a close eye on that. I'm interested to get your outlook though for the rest of the year because there's not much time left in the year and this is a bit of a shifting market where banks are doing things out of cycle with the RBA. So what are your comments on for the rest of the year?
Yeah, well, what the move by the banks is they're protecting profit margins. They're now required to hold increased capital. It's changes in regulation. They're protecting profit margins. So, like I've said in previous updates, I think we are at the low of mortgage rates. I think we're probably at the low in terms of the RBA rates, and depending on the outlook for the economy, if we remain on a stable footing, then I think we are at the bottom. If the RBA was going to cut rates this year, it would have been yesterday, simply because it takes a bit of time for that to filter in before the Christmas shopping season and everything like that. So I don't think the next meeting will really be a live meeting. There's still some speculation for cuts in rates next year, but that said, if the RBA does cut rates, I don't expect the banks will be passing it all on because they are, like I said, protecting their profit margins, and we're probably not going to see the deals that we used to see from the banks. Long-term cost of money, it's not going up, but I think the same would apply for fixed term rates as well.
Okay. Well, that's the interest rate side of things. What about other markets? What's been happening in other markets over the last month? Yeah,
look, we saw quite a bit of share market volatility in August and September, concerns around China and some comments by the Federal Reserve and them deciding not to raise rates. We've since seen quite a good recovery in share markets overseas. The data in the US is looking all right. They will probably raise their rates in December, and markets have been waiting for that to happen for a long time. The data in China seems to have stabilised, and so our Aussie markets recovered through that period as well.
Okay. Well, look, that's our interest rate update and our Melbourne Cup edition. We'll see you again next month.